Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
Good to be with you again, Jim.
Inflation, high fuel prices, U.S. President Joe Biden under a lot of pressure to bring down gasoline prices. Can he do that by releasing the U.S. Reserve? Because there's a lot of conflicting information coming out about that and the effects that'll have.
The U.S., if you remember, the economy, I think, grew in Q2 at 6.2, Q3 2.1, which was revised from 2 to 2.1 this past week. The concern is that once you get past the Christmas season, that when you get into Q1 of 2022, we could be looking at recessionary conditions. So the price of crude has come down from $85 to $78 just in the last 2 months, and less than 2 months. And I think that it's quite possible we're going to be looking at lower oil prices, not because of Biden's calling on OPEC to raise production from 400,000 a month to 600 to 800,000, or because of his SPR decision, which is when the U.S. consumes 21 million barrels a day, if you release 50 million and 32 of it is only in the near term, it's not enough to really make a difference. It's the economy, stupid. And, normally if you have recessions on a worldwide basis, you lose between 2 and 5 million barrels a day of demand worldwide, depending upon the painfulness of the recession. And if you remember, during the COVID crisis, we lost 8 million barrels from 100 to 92 in terms of demand. So if we have economic dislocation, it's going to be the one that drives crude prices down. Not anything that the politicians are doing or the saber rattling with OPEC that's going on right now.
Now, the first thing that Biden did was cancel the XL pipeline that took Alberta oil down to Louisiana for processing. Now we're hearing he wants OPEC to increase production. He's urging China to produce more oil. And I didn't even realize China produced oil. They're number 7 in the world. Canada is number 5. So could China make a difference in the world's oil prices if they up their production?
Absolutely not. China consumes about 14 million barrels a day. They produce only 4, so they're importing 10. And their fields onshore and offshore are really not growing very much. Their only success with the drill bit has been with natural gas, with offshore with Husky, which is now part of is Cenovus, and they've had some good discoveries there with the Chinese national oil companies drilling offshore for natural gas, but oil has not been very successful. And when you're 4 million barrels, even if you take it to 4.2 or 4.5, that really is not going to make a difference. I think the key is going to be what OPEC does now. December 2nd is the next meeting of OPEC to decide what they're going to do for the next month. The key thing was before Biden opened his mouth in September, OPEC was saying they were going to do 400,000 a month. So in September they added 486,000 in the month, of which Saudi Arabia brought on 139,000. I'm looking at the OPEC report here now for October. And again, they were told by Biden, raise the production to 600 or 800. China also was asking them to produce more. So what did they do? They only increased production by 217,000. So they didn't give you even the 400,000 that they were supposed to give you. So if the politicians are going to push OPEC to do things, and OPEC doesn't want to listen, or OPEC doesn't get quid pro quos on other things, maybe Yemen or Iran issues related to any agreement that the UN comes up with the new negotiations with Iran, because of course Saudi wants the Yemen war to go away, and the Yemen war is being stoked by Saudi Arabia on one side and by Iran on the other side. So there's a lot of other issues that come into play here, not just world demand, and OPEC is saying now, as their quid pro quo on this tit for tat, that if you put on this new production or bring on the sales of production, storage from your SPRs, there's going to be a bigger glut next year. Well, there's, 1 minute they're saying there's not a glut, and that's why we're raising production by 400,000 barrels a day. Then they stop producing it at 400. They do much less. And now they're saying there's going to be a glut next year, and yet there's people running around, Goldman Sachs, Bank of America, JP Morgan, calling for $100 oil in Q2 of 22 and saying that demand is going to be 102 million barrels. And then some are saying we're going to see $100 oil in Q2, Q3 of next year. So, there's a lot of noise in this. And my view is it's the economy, stupid. Watch what's going on with the economic growth. Now, some people are saying that, we had positive numbers for retail sales. But if retail sales go up by 2%, but you have 6% CPI and you have 9% PPI, you tell me, do you have real volume increases, or do you just have partial price and volume decline? And so to me, you're going to have to watch the inflation-adjusted economic data coming out in the next few weeks and months. And I think that's really the key for me of moving forward. And we write about this in our Eye on Energy, the piece that you got yesterday, and it's available on our website. It's a complimentary piece we do, so people will want to get an update on what's going on the oil and gas side, macro side, OPEC, EIA data, the politics of oil, whatever. It's a free piece, and people just go to our website and can get access to it. Our paid subscription is related to the company information, the stock information, and that's where we cover 30 companies, and that's the paid product. But if people want info on the macro side, as you and I are just talking now, we have our views and the data that comes out and the economic impact of that data on our website.
We have major institutional investors saying they're no longer going to go into oil and gas exploration or take part in fossil fuels. Will that impact prices in the future if we're not getting investments to look for future oil and gas?
Well, I think the big issue was, the massive amount of money that went into shale that brought on an enormous amount of production in the Permian and the Eagle Ford, but, it was debt capital and the equity returns were very poor. So the lenders and also the shareholders are saying now, look, we want shareholder returns. You're in a sunset industry. We don't know when the sunset is, but renewables are going to take over, and fossil fuels, because of climate change, are going to go into decline. And, you've got a lot of different people saying, if EVs become by 2030 25% of the vehicles, then the demand for gasoline and diesel fuel will come down substantially. And then, of course, the issue of heating oil and, being switched over as well. So, my view is that we're going to see, decent demand for the next 10, 15 years for natural gas. For crude oil, it's going to be more important to figure out, when do we start seeing renewables come into power, where battery storage is stronger, where you can, if you have no wind, like we had the problem in the North Sea, or if, solar doesn't have, has clouds, and do we have the storage for it so that, and also for the cars, can we get the extension of the range so that you can drive, to and from Calgary to Edmonton return, with one charge at the house? Or, the other one would be, the issue of batteries, being able to be charged quicker in these quick charge stations so that, if, you can go in for a latte, have your car charged up and it's all charged up by the time you've had your latte. But, if you have to wait 2, 3, 4 hours or overnight, 12 hours overnight to charge like you have right now, for some of the home charging systems, it's going to take longer for EVs to become a bigger part of the solution, to the climate change situation.
Yeah, one thing I didn't know about EVs, depending, I guess, on how your charging station is set up at home, if the power goes out, you can actually take the power out of the car to turn on your lights and keep your fridge running.
Yeah, the good thing about is that over time, as battery technology improves, and you can have maybe some solar panels on the roof, and then you can take care of all the power in your house, and then with the car there, you can store the power in there. You don't need to have the big batteries at home. You can just charge it through into the car, and then the car does the reverse. So yeah, it's going to be interesting to see what Elon Musk and others working in this space are looking to do. And it's not only Tesla. You've got the big battery manufacturers in Korea and Japan, and the factories they're planning to build near GM and Ford's EV vehicles in the States. Germany, the same thing with Volkswagen. This industry is going to have significant change in the years ahead.
We'll have more with Josef Schachter right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Dr. David Suzuki has really ignited a lot of controversy with his statement, if politicians don't take climate change seriously, we're going to see pipelines blowing up. Is that a threat or a promise?
Well,
or a warning?
I think being generous, I'd say it's a warning. But I think he knows that a lot of these environmental activists are look what's going on with the LNG pipeline, the coastal gas line, where you're getting protests, and you've got a lot of people from the media there, reporters that are there, and they're being arrested as well. He should be applauding LNG because it gives you the chance to close down coal-fired. If you really care about the planet, you should be saying, let's get rid of dung and let's get rid of coal, dirty coal, thermal coal, and clean it up with natural gas until renewables are there. So to me, he's just stoking the fires of the antagonism because people are who see that COP26 was watered down at the end because India and China wouldn't sign off, and neither would Germany and Poland because look at their coal industries right now with Germany saying that they're not going to approve the Nord Stream 2 pipeline because of the Greens in the government there. They're allowing their coal industry to go, to increase supplies and use more coal-fired electricity. So if this is a Green Party and they're doing that because they don't want to allow Russian gas into the country, they're nuts. So to me, I think all of this is unthoughtful. It's all at the margin, and it's all for political theater to rouse up the environmentalists around the world, without them thinking that by allowing LNG exports from Canada to China, to India, to other places, you're displacing coal and dung. In China, it's coal, and in India, coal and dung, and that's a better win for the world, the planet.
Yeah. Now, I'm sure you got the irony, and maybe the protesters didn't. When they blocked one of the major intersections, the anti-natural gas pipeline people used a propane heater to keep warm. Where do they think that propane came from?
Yeah, the RCMP should take it away from them. Let them stay out in the cold or the rain, and fossil fuels. You don't want any of that. Let's take that all away from you.
Taking a look at upcoming markets here, natural gas use. How's that going?
Well, natural gas got up into the close to $7 for NYMEX, and the same for AECO. AECO is now below $4. We're just under $5 for NYMEX in the States. So winter is here. We had a drawdown with, in the natural gas data this past week. I think it was 27 BCF. It was less than the 5-year average, but we're beginning to get into the winter drawdowns. Anytime after November 1st, that should happen. The big thing is December, January, and February is when you have the big drawdowns where you get the very long cold spells and you can have 200 BCF drawn out of storage. So we're going to wait and see what happens. And if there are large drawdowns in North America, then you'll see spikes up again to $6, $7 during the winter. But if we get into January and we haven't had those cold spells, we could see natural gas prices weaken. And given that we've had such a significant decline already in natural gas prices, we've already starting to see some natural gas stocks weaken. And my view is that if the U.S. economy gets slower, which is what we've been writing about in our Eye on Energy and in our SCR reports to our subscribers, is that we think that the U.S. will be in a slowdown recession in first half of 2022. And remember, the tapering is gone too. So you've got the financial stimulus gone, $15 billion a month by the time you get to June, assuming they don't speed it up to March, which is being talked about. They're going to remove $1.44 trillion of stimulus, which is 6% plus of GDP. Well, if GDP is growing at less than 1%, or then and you're taking 6% stimulus out, you tell me if the U.S. economy is going to grow next year, and if the second stimulus package doesn't get passed before the end of December, it's unlikely to get passed because Mnuchin and Kristen Sinema and some of the other senators won't sign on from the Democrat side. And the left-wing senators won't sign on if they don't get, some of the things they want, taxes on the rich, and Sinema says no on that. The climate change people on the left want more tougher standards, and Manchin is saying no, he's a coal state, and his wealth is from coal. And, he gets $500,000 a year in dividends from the company his son is running that he started, which is a coal marketing company. So, the politics and the personal side of some of these politicians has to be known to understand their motivations. And to me, the problem is I don't think the second bill gets passed, which removes that stimulus, and that means that the chance of when everybody says there's no workers out there, wage rates are going up, so you're saying that the economy is really at full employment, and wage rates are going up. Well, that means you should have a recession. You got to slow things down and cool the economy off. And my thinking is 2022 is going to be that year.
Yes. Now, in September, Canada had 1 million job openings that nobody was filling, but recent stats now show, or research, people are now saying, the government aid is now ending. Time to go out and look for real work again.
The problem you have is more in the States than in Canada is childcare, and so if you look at the participation rate of women in the United States and in Canada to an extent, because of childcare being expensive, even though Trudeau is going to do $10 childcare going forward, it doesn't allow the participation rate to go up. And plus, a lot of people who had, to make ends meet had 2 or 3 different jobs that were low paying. If they're going to get a better paying job, with, $15, $18 at Target or Amazon versus $8, they may not need 3 jobs, maybe 2 or 1, which means those other jobs get unfilled. And unless you allow for immigration, which of course is a problem in the States, you don't have people taking those lower wage positions. And that's why a lot of things get stalled. You saw, this past week, Nordstrom talk about supply chain issues and also wage problems. The Gap did the same thing, and both of those stocks got murdered this week.
Mm-hmm. Now, if migration or immigration to Canada increases once again, if COVID ever does lift and we can live a normal lifestyle again, what kind of an impact is that going to have on the job market, and will it fill some of these empty niches?
Well, it matters over time. First thing, of course, language skills are important. So are the jobs one where you need language skills because you're dealing with the public? So if you don't have the language skills, that takes time. And then Quebec, of course, wants you to be bilingual. The CEO of Air Canada isn't bilingual. Now they're saying CP and CN has to have a bilingual CEO. There's pressure on that. So I think that language still becomes an issue in various parts of the country. And then the other thing is, are the jobs going to the big cities, or are they going to go to smaller towns in rural Canada, which is where the jobs and potential housing is affordable? Do the different provinces open up and take in people, and then do they have the skill sets that are transferable? I.e., if you have if you're an accountant or an engineer or a doctor from overseas, are those skills allowing you to get licensed in Canada in a quick pace so that you can go into some of these places where there's job shortages, be it an electrician, be it a carpenter or whatever, or any teacher, whatever. Are those skill sets transferable, and can you get licensed to work in the country? If you're talking about waiter and waitresses jobs, that's where the language skills come in, or basic construction jobs where you know how to hold a hammer and and work in the field. Then a lot of people from these warmer countries don't really want to be out in the cold weather of our winters. So there's a lot of little nuances that have to be understood.
Calgary, a lot of empty office space. Is that problem going to be solved anytime soon?
No, that's, the city is talking about an increase of property taxes to individuals because of the lack of revenue coming in from downtown. Companies have downsized so much. The oil and gas industry used to be an exploration game, and so you needed to have a lot of geologists and geophysicists. You had landmen, etc. Now the Montney is a manufacturing game, and so you don't need as many people, and so that is causing the lack of employment in downtown Calgary. Plus, you've had a lot of mergers, so you remove a lot of overhead. Like the accounting. If two companies merge, one company you don't need the accounting staff of the other company, or most of it. You don't need all the land people. You don't need all the the space, and so mergers are still continuing in Calgary, and so the job count's not going to rise. If you talk $100 oil and $7-8 natural gas over time, people are saying that might bring employment back. But in the meantime, what's happening is high tech is moving in. Amazon's planning to have major new facilities and a high tech. Their AI people come to Calgary. There's going to be one in Montreal now, one in Calgary. So there's a lot more jobs coming in other areas, but not enough to take up that space. So the city has said, why don't we convert some of that office space to housing? And that's what's happening. There's a lot of conversions to apartments, but everything takes time. There still is probably A space, 25% vacancy rate, B and C space, 35% space availability. Rates are very, very low. And when I drive through downtown, if you need a parking space, you don't have to worry. Going back pre-COVID, you'd have to go to a city parking lot and go to the third or fourth level to find a place to park. Now, the city streets, you almost any time of day you can find one until 3:30 when you got to get that away from downtown for traffic movement. But there's parking lots everywhere where any time of day you can find a space. So it's going to take time.
Is Bitcoin mining the future for energy production in Alberta? Using unproductive or non-productive natural gas facilities?
Well, what's happened is TransAlta, which is one of the big players, closed their coal-fired facilities and plan to close all of them, I think within a year or so. So the excess capacity of electricity in the province that a lot of the early Bitcoin players took advantage of because the rates were cheap, rates are not cheap anymore. And so, there's also the grid doesn't have enough power. One of the companies I was talking to during their earnings call was saying they were planning to drill a well south of Calgary, and they wanted to get tied into the electric grid for one drilling rig. And the power in the area wasn't sufficient to get to them, so they've gone to natural gas versus using diesel. But they were trying to go even more environmentally friendly with power from the grid, electricity power from the grid, and yet there was not enough. So I don't think that, I think the Bitcoin guys are not going to be here. They've all gone to China because they were getting advantage of, the cheap electricity from coal-fired, and now, of course, China shut that down. So they're going to move wherever they can find cheap electricity. Is that Russia, or is that Ukraine, or is that, India? Wherever they can find it, that's where they're going to do the mining. But, that's why I think another reason why Bitcoin prices have gone up is it used to be that, electricity inputs were like $10,000. So when you got cheap Bitcoin at 10,000, you were really not you were just getting the value of the electricity. Now at 58,000 or whatever Bitcoin is, and let's say even if electricity inputs are 15, you can see the margin is pretty generous for the Bitcoin players.
Joseph, anything else we should be keeping a close eye on right now?
Well, as I said earlier, I think it's the economy, stupid, and I think, for people who are investing in the oil and gas industry, that's what I think they should be looking at. The bulls are saying demand's going to grow by 2 million barrels a year. Going from this point, we're going to go to $100 oil. In 22, we're going to go to all-time highs over 147, which we had in the second quarter of 08 in the next couple of years. I don't buy 5-10 years from now getting north of 100 and even maybe into all-time highs. The problem I see is the next 6 months to a year, because the economies are slowing down. We know it's from Germany. We can see Japan is slowing down, China slowing down. And if these world economies slow down, that's going to, we've had a massive run. Just think about it. The oil and gas, TSX oil and gas index in March of 2020 was around 38, after the worst of COVID, pandemic and shutdowns. And now we're 171. So we've had a 4-bagger plus in the oil and gas sector. Many stocks like Whitecap have gone up 10 times, and some have even gone up more than that. I think a pullback here is very likely, and what we're saying to our clients is sit on the sidelines, take some profits, and if we do see a recession, stocks are going to come down significantly, 30 to 50% from the lofty levels they are at this week, and then they'll get a next buying opportunity. So we're saying caution is justified, patience is justified.
Joseph, thank you so much for being on the show, and happy Thanksgiving to all of our American listeners.
Same. I agree with you. Take care.
Okay, take care. My guest has been Josef Schachter, founder of the Schachter Energy Report, online at schachterenergyreport.ca. If you have any questions for Joseph or any of our other guests, you can send your questions to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.